Welcome to the latest episode of Damien's Market Update, which is the investment show where I talk about what's been going on in investment markets and what to look out for in the days and weeks ahead. Now, as ever, if you find this useful, then please do hit that like button, but also subscribe to the channel or the playlist so that you can get future updates. So I do one of these shows every month, and it's aimed at anybody who is an investor, and even if you are somebody who buys and hold your funds for the long term, you might just want to know what is impacting your portfolio and why it is moving in the way that it is. Now, at the end of the show last time, I did point out there was a potential banana skin in the shape of Nvidia and their Q1 earnings report. Now, the chip maker, which has done exceedingly well because of its demand, or the demand I should say, for its AI chips, had lofty expectations for its results, and it smashed those. And as a result, its share price has soared, and it's actually taken it to be the largest public company in the world, overtaking Microsoft. But it also pushed the S&P 500 in America to new all-time highs. But Nvidia has only been part of the investment story over the last month. Politics has also taken a grip of some global stock markets. So if we go to Indian equities at the beginning of June, we saw the market surge 3% initially as the result of the election approached. And that was because they believed, or investors believed, BJP would secure a strong majority. But then the market crashed 6% in a single day as results showed otherwise. But then we had a rebound as a coalition government was formed with Prime Minister Modi at the head. This political uncertainty in the short term caused some disruption, but ultimately the Indian stock market has since resumed its 2024 rally as a result of political certainty. Now, at the opposite end of the spectrum, European equities have endured a dismal 10 days of political uncertainty, and it was sparked by the snap election called by French President Emmanuel Macron on the 9th of June. Now, this bold move is his attempt to halt the rise of France's far right, which enjoyed a strong performance in recent European elections. The move caused a stock market sell-off in France, but the shockwaves have been felt across European stock markets. If we look at the French stock market, that is down around 6% since Macron's political gambit, as concerns grow that the country could face a financial crisis if either the far right or the far left win the election due to their extensive spending commitments. European equities more broadly, as measured by the Euro Stoxx 50, are down around 3%. European equities were gaining a lot of positive attention from investors, especially after the European Central Bank cut interest rates, but Macron has since muddied the waters. Of course, while the UK's FTSE 100 has been unfazed by developments in Europe, it has faced its own challenges after Prime Minister Rishi Sunak called a snap general election as well, and that is set for July the 4th. Now, despite the announcements, the FTSE 100 and sterling showed little reaction initially, and history shows that a UK election can be positive news for UK stock markets, particularly mid-cap stocks, if the election result goes as predicted and a majority government is formed, which is what is predicted this time around. But the FTSE 100 has fallen 2% since the election was called, and the Bank of England hasn't been able to come to the rescue of investors as it kept interest rates on hold as widely expected, because of course a cut would have been a boost to UK equities. Now, interestingly, US bonds have continued their rebound in June, with the 10-year US Treasury yield tumbling even further, down from 4.5% nearer 4.21%. And that's because inflation has fallen in line with markets' expectations. However, the bond picture is more mixed in Europe, and that's down to what's going on in France. So in summary, bond investors have seemingly joined equity investors and major central banks in dismissing a second wave of inflation, which means bonds are starting to contribute positively to your portfolio returns. US equities are once again setting new all-time highs, while most other major developed equity markets remain within 2 to 5% of their recent highs that were achieved in May. And that's because political uncertainty is playing a significant role in that pullback. With important elections in Europe and the UK due in early July, it's likely that volatility will be a thorn in those areas of your portfolio for a while yet. So that is it for this episode of my market update. As ever, If you enjoyed it, find it useful, then do hit that like button, but also subscribe to the channel. But also do leave any comments or questions below this video and I will do my best to answer them.